All right, good morning, everybody. All right, let's get started. Yeah. All right. S&P obviously closed yesterday. U.S. markets closed, public holiday, President's Day. So there wasn't a hell of a lot of action on our market yesterday. Pretty quiet for most of the day. Um, News out of Europe, we had talks between Greece and its European counterparts, which broke down yesterday. So not much clear. Not much coming out of those talks. I guess they'll be ongoing for the next few weeks. So we'll obviously be watching that for some direction. Um, China, the clear outperformer yesterday or this morning, trading pretty well. They actually had a slightly weaker house prices index which came out, but I think they're thinking that that's going to cause some rate cuts in the market. So China trading pretty well on the back of that number. Australia struggling a little bit. I think the banks underperforming there. Commonwealth Bank of Australia seen down 3.4%. So Aussie's clearly the underperformer out of Asia this morning. All right, the chart of interest this morning is the months to a US rate hike, which is at the lowest since 2010. So what they're saying is the number of months that economists predict that first rate hike will happen. And at the moment we're at 6.85, so they're expecting a rate hike in 7 months' time, and that you can see that the trend is clearly coming down. So clearly they expect a rate hike out of the States coming up soon. Corporate action, we had Venge, which came out well, it must have come out already. The headline earnings per share was 35 cents, which is right in line with guidance. Definitely down from the original estimate of 83 cents, so I presume that's going to be priced in. Revenue light on the original estimates, but I presume that's going to be more or less in line with guidance. And then later we have US Medtronic, which is coming out later in the States today. Key factors, we got UK CPI, UK PPI output, we got GE's, the German ZEW survey, current situation, and US Empire Manufacturing. So I can't see too much going to be moving the market apart from maybe the UK CPI. All right, let's jump into the maps quickly. All right, the first thing we're going to look at is Discovery. Discovery, as you can see, has been stair-stepping slowly all the way. It normally takes a while for this move to happen. There haven't been any big spikes like we've seen in some of the other stocks. But a slow stair-step higher starting from mid-December. Since the last breakout in the beginning of February, we've been moving sideways for the last sort of week and a half, just between this 117 and 120 range. So we're going to be keeping an eye on either side of that. I would imagine if we can get through 120 on a closing basis and make a new all-time high, then we could pop a few bucks, possibly to like 123 as a short-term target. Next one we'll look at is FirstRand. FirstRand making a new all-time high yesterday. Also sort of breaking out of this small range here we've had between let's say 52.60 and around 51.30. So small 130 range that has been for the last few weeks. Finally broken up to the upside. As I said, new all-time high, and we're looking at a target probably, I would say around 54, 55 bucks in the short term for FirstRand. Harmony. Harmony's, it's been struggling. Goldfields has also been struggling, but Harmony has broken down from a double top neckline being at around 31.90. I would say the height of this double top is around 36. So we're looking for approximately $4 to the downside, which could take it closer to 28 bucks. Call it as a rough target from the breakdown of this double top. It hasn't been like a clear one-way breakdown, so keep an eye on it. The neckline's 31.80. I think we take that out, that the pattern might be negated. But otherwise, as long as we stay below this level, there's 28 on the cards for Harmony. Next one I wanted to show was Mr. Price. Okay, so Mr. Price been in a clear bull flag here, which broke out to the upside last Thursday. I mean, slowly moving higher. I watched the trade action a little bit yesterday. Couldn't really get higher than 264. There was a bit of a salary loading there. So if we can get through that 64 level, we should be back on the horse to go take out all-time highs, and I would say probably higher. The last one I was going to show is Vodacom. Vodacom has been in this very rough, sort of large range over the last year, but pretty much the whole year, between sort of this 138 level and down at 123. There was quite a few touches. We're getting very, very close to, as I said, it's quite difficult to draw an exact line here because of all these wicks, but we're getting very, very close to the top of this channel. A close above 138 could mark a breakout here. As I say, it's difficult to call an exact level, but I would say a close above 138 would be very bullish for Vodacom, and the range is wide, so that the target could be up close to $50 should it break out and hold above that level. And that's all for today, guys. Good luck trading.